Hello again, everyone. It's Vince Fuller from TradingWinds.com, and this is our update for October 16th, 2017. Let's take a quick look at today's markets. Once again, we saw new record highs for the three main equity indices today. The Dow up 85 points, while the S&P 500 was up 4.5. The Nasdaq gained 18 points, while the Russell continues to lag behind here and, put in a pretty flat day overall. Bonds were flat as well. They were lower earlier in the session, made it all back. Gold did the reverse, was higher earlier and then reversed, closing lower by about 7 points or so. And crude just took off early in the session and then pulled back, still gaining about half a point though. All right, now Netflix today, after the market closed, did release earnings. We get a lot of big names this week. Netflix sort of kicking the party off here and did very well, beat across the board. They came in at 37 cents a share compared to the expected number of 32 cents a share. They beat on revenue. They beat on subscriber numbers. They added 5.3 million new subscribers last quarter, and compared to the estimate of 4.4 million. They also confirmed that they expect an even higher number for the fourth quarter of this year, a little over 6 million subscribers. So the market liked it, up 1.6% during the session. After hours, it was up another 2%. We'll see where this opens tomorrow, but certainly it looks like a continuation of this move higher on Netflix. Now, timing the market, I often get asked, how can you actually time the market? Well, it actually, using price action is fairly simple. Let me show you an example, and I'm going to use JP Morgan for this. And we see this right now. Have a look at the last three candles here. And this is all it really takes, is you wait for a move, you wait for a pullback, and you look for a formation such as these three candles, where you have the middle candle having a lower low than the candle on either side. And when you get that, so we're pulling back and then we bounce. So lower low, and then suddenly a higher low. And if once you break the high of the first candle here, there's a good possibility that it will continue going higher. Now, you'll see this everywhere, okay? Here's another three down here. Now, the high of that first candle doesn't always get taken out by the third candle, but when it does get taken out, that's when you want to be in the market. That's when you want to get back into the market. So here's another one of those situations where you have a lower low than either candle on either side, okay? That little turnaround pattern, and then you mark the high of the first candle. When it breaks, that's when you want to get in. But you don't want to take every single one. What you want to do is take the ones that have momentum on your side. So you already have a nice trend in place, you pull back, and here's the 20-period moving average. When you have a slope in your favor and you get that pattern, that's always a very good indication that there's a very high probability of that follow through. Okay, so that's a simple, easy pattern you can use. You can use it at bottoms, you can use it at tops. Regardless, just try to use it with momentum on your side. So any pullback where you get that 3-bar pattern, you break the high of that first bar, and usually you'll see it make another nice run. That's about it for now. Enjoy the rest of your day, and we'll see you on our next update.